Was here.
Hello, Nadifa. Okay. All right. So, chapter 9 and chapter 10, pretty much petty cash and bank reconciliation, and etc. etc. So, let's go ahead and get started. So, question number 1, on January 1st, you opened your store and needed a cash register, right? So again, you decided to establish that at $300, okay, which should be enough for the first day of sales, right? So go ahead and journalize this transaction. All right, so how do we establish a petty cash fund? Or in this case, it is a cash register.
Cash register.
Cash register, good. I'm going to say cash in register. Right? And what is my, where is this coming out from? Where?
Checking.
Yes, it has to come directly from your checking account, right? You either go pull, withdraw some money, or you write a check to the person who is responsible for this, and it is for $300. Okay. So then, at the end of the day, you counted all the sales receipts, okay, and you had a total of $156.88 in cash remaining in your cash register. So how do we replenish this cash register? So here's the list of all the sales receipts I had, right? So how do we replenish a petty cash fund, or in this case, a cash register? I only have $156 left in my register. How is that enough for me to conduct business for the next day? So how do I replenish it? I'll give you a hint. What is my total cash register supposed to equal to at the end of the day?
200.
What did you say?
Uh, just 200. No,
It's not 200. No. What did we establish our petty?
300.
It's supposed to be reflected as 300. But
300.
in this case, I only have $156.88 in cash. And then I have a bunch of receipts in there. So how do I determine how much more money I need to put back in my cash register to equal the next day to have $300 in my register?
Sales receipts.
Sales receipts, okay, for how much?
Was it 150 what? Sales. and
156 is how much cash you have in your register.
so 143.12.
All right, how did you calculate that?
You take the total cash that you have left minus 300. That should be your total sales receipts that you should total up
How can I guarantee that that is true?
by looking at the receipts and adding up
Did you add them up?
all of those.
Yeah. Because what the assumption is, I could have a cash over or cash shortage.
Right. Exactly.
So one thing to verify that you have it is to count all the receipts and add up whatever cash is remaining in your bank account or in your cash register in this case, and see does it equal up to 300. And if it does, then you're good. You don't have a shortage or an overage. But in this case, our first thing that we have to do is we have to count up the total amount of receipts. So what is my total amount of receipts?
One four 99.
What did you say?
14.99. Did I miss something?
I don't know. You guys are working this out. So Sandra, can you confirm that this is correct?
Yeah, hang on a second.
$14.22.
143.12.
Okay. And then go ahead and add your cash in the register, and we get a total of 300, correct?
Yes.
So here we have no cash shortage or cash overage. We did very good on our very first day of business, okay? That's what you have to do. You can't just take a shortcut and say, oh, I'm assuming that all my sales should equal 142, yada, yada, because we have to know, is there a possibility that we have a shortage or an overage? And we have to calculate that and take that into consideration.
We could be missing receipts too.
Absolutely, that could be true too. But in this case, I have every single receipt number in order, so there's no room for discrepancy there. So here I have a total of $143.12. Now, how do I replenish my petty cash fund or my cash register? I need to have $300 to start the next day, and right now I only have $156.
So it would be
These things confuse me already 2 days. Maybe I will make mistake. We have no entry now.
I'm sorry?
It's my question now. We have no entry now for these things, or yes?
Yes, because we are replenishing the petty cash fund.
Okay, thanks.
Mm-hmm. But if so, but this in this case, this is a cash register. So the only person that's taking money out from this is going to be someone who is, exchanging money. Okay, but in this case, because of all these transactions that happened during the day, I only have $156 left in my cash register. I need it to be 300 so I can do my business for the next day. Okay, how do I put money into my cash register if I only have $156 left in my cash register and I need to have 300?
so you're gonna debit the sales receipts and then credit the checking.
Correct. Because in a sense, you're cashing out your cash receipts or your sales receipts, right? Because ultimately, you need to have cash in the register in order to operate the business, right? Every morning, right? Every person needs to make sure that they're going to start out with this much money, because you never want to go in the middle of your shift to say, hey, boss, I need more money because I'm running out of change to give my customers. Right? You're not going to do that in the middle of your thing. It has happened before, or I mean, it does happen oftentimes because, again, you just didn't have enough money in your cash register. So, in this case, yes, that's what you do. You're going to total up the total number of receipts, and then that's going to equal the amount that you're going to write the check for. Now, in this case, right, I'm also double checking. Does my statement hold true? Does my cash register hold the value of $300? If I have $143.12 in receipts and I have $156 and let me see whatever and 88 cents in my cash register, if I add those two together, do they equal the amount that I started with?
Yes.
Yes, in this case, yes, it should. All right. If it doesn't, then something happened in between. That's why it caused you a shortage or a overage. But in this case, that's the best way to do business is that you need to always replenish your cash register, especially if you're dealing with cash customers, right? They expect you to give them their exact change back. And if you don't have the exact change and you're looking at your boss and saying, "Hey, I don't have enough change to give change to my customer," then what's going to happen, right? So, other than that, yes. So you're going to debit and credit, and you're going to reimburse the petty cash fund for the $43.12. So then now, when you start the next day, your cash register is full with $300 cash. All right. No discrepancy there. If there was a discrepancy, right, we would have to either do a cash overage or a cash overage or cash shortage, right? And we would have to measure from there. Well, how much cash do I actually put in there, right? So my end goal right now is because I established my cash register to be $300. That means it must hold its value of $300 at all times. All right. So then on June 1st, your business began to pick up, and a few days you were running low on cash, okay, in your register, okay? So you decided to increase the amount by $500, okay? How do you record this transaction? Okay, so I want my cash register to no longer be $300. I want it to reflect as $800. So then every time I start my day, I always have to have $800 in my cash register.
Yes, we would debit the cash
Debit-
register and credit
No check.
checking.
Absolutely, that is correct. So here, you're gonna debit cash in register, and then you would debit your checking. Yes. All right. And in this case, let me see, we're increasing it by $500. So now, when I actually utilize my ledger, I should have $500 in total in my cash register at all times. So that's one thing that you need to know, just so that you don't debit or, in this case, when we do have our sales, do we ever touch the checking? So in this case, when I do my transaction, I'm going. It's obviously going to go to my checking account. But at the end of the day, right? Because you're weaving in and out. You're giving cash money. You're also giving cash back. So at the end of the day, your cash register must reflect this amount. Okay. All right. Question number 4. At the end of the day, okay, on June 1st, okay, you counted all total of cash sales receipts for a total of $684.52 and a total cash of $115.48. Replenish the cash register for the next day.
Debit cash.
Debit cash. No.
No, cash. It's sales receipts. Sales receipts.
Yes. Sales receipts.
And then checking.
And then checking. Good. Okay. Good. How much am I going to replenish the cash register for?
Your sales receipt should be 684.52.
684.52. Now let's double confirm this. That add the 684 plus the 115, 848 does that reflect $800?
Yes.
Yes. So at least we know at the end of the day, right? That's what I'm trying to. This is to me. This is the easiest type of what do you call it? The easiest thing to relate with, right? You can't just walk into your store and you have cash in your register. You can't assume that, especially like think of it for example. I'm Starbucks, right? I have cash customers and I have credit customers, people who are going to be swiping in left and right, with credit cards, and then I have cash, right? The first job that your person that's in charge of the register, right? The first thing they have to do is they need to count how much money is in the register. And again, you always want to make sure that you have enough to serve for the rest of the day, as in you don't need to run to the bank and get more change, right? You always want to make sure that your cash register is full, because again, you're going to be dealing with your cash customers and you're going to be dealing with your credit customers, right? Some transactions they're going to be swiping their card, other ones you need to give them their change. Okay? Now, of course, like I said, when you start and you go into the Starbucks in the morning, right? And you count that your register is low. What's the first thing you're going to do? You're going to replenish it. All right? And then same thing, usually at the end of the day, what happens? You're going to match the total receipts to the total cash that you have in your register, because that needs to be equal, right? Because you don't want to miss any money, right? For any sales that you may have missed, or let's say you were responsible for that for your entire shift, right? You're responsible for every time you log off the cash register is to count how much money is in the cash register, and you're going to match it to your sales receipt. That's always rule number one, just to ensure that not only did you calculate the sales receipts correctly, but that you also gave the correct amount of change correctly. All right. And this is, I'm sorry, I don't have a better example, but this is to me the one that makes the most sense. And instead of a petty cash fund, right? Why have a petty cash fund when you can use a business credit card? Same idea here. That's why I said something that's actually more realistic is going to be a cash register, because at the beginning of every shift that you do or every morning, your cash register needs to be full of money, because you'll never ever want to come into the situation where you can't even give your customer cash back because you don't have enough money in your register. Okay? So as far as understanding how this works, I mean, as far as this is like my best understanding of how I can teach this to you, because at the end of the day, when you replenish your cash register, if you're matching it to your sales receipt, that's exactly what you're doing. That's exactly what we're doing right here. We're counting how many sales receipts that we had in total, and we checked it upon how much cash we have it left in our register, and did it equal or match my my total amount that I originally started with. You can also apply, I guess you could apply the bank reconciliation at the end of the day, right? How do you know how much you need to reimburse? You can't just say I'm going to reimburse it for X amount of money, so then it just makes it up to 600 to 800. Then you have the possibility of, what if you didn't record a sale? What if you missed a sale? What if the owner came in and decided to take money because he can? He's the owner of the business. So those kind of factors you need to take into consideration. So same thing here. If you apply bank reconciliation, what are you doing at the end of the day? You're matching your sales receipts to your total amount that you have in your cash ledger. And at the end of the day, they need to match to what you began with. Yes? I know this concept is kind of fuzzy because it's not making any sense. Why not take money out of the cash register immediately? Because think about it. If you're taking money from your cash register, right, every time you make a sale, eventually that cash in the register is going to run out. And that's exactly what I mean when you journalize your transaction. You don't record it until the end of the day. You're not gonna have your ledger right next to you at Starbucks, and every time you make a sale, you're gonna calculate it right then and there. Do you know how ridiculous that's gonna be when your customer's waiting on you? That is what I mean. So these things, they happen towards the end of the day, end of the given period, whatever it is. You need to make sure that your accounting is accurate by matching things that happen within that thing right there, right? If I made a sales, right? Obviously, I'm going to be receiving cash. But I also have to match my cash register, right? I have to make sure that I have enough cash to give back to my customers. That's the main concept here. In our books, it's going to be for the solid exact amount. But in reality, the customer's not going to give you $20.50. They might give you $21. So you have to give them 50 cents back change. So therefore, there's more transaction that is actually in reality that has to happen. And you need to have the money in the cash register to be able to do that. Again, petty cash, right? It's more or less like chump change, right? You're not going to have $20 bills in there. They're going to be all in varieties, different types of ways, because at the end of the day, when you do give $20 to the person, right, you're expected them to give you a receipt and the exact change, all right, to make sure that your balance stays the same, all right? So yes, does that make sense?
Yes.
Okay. All right then. Let's go ahead and so questions 5 through 10 are related. Okay, so they're related. So number 5, on June 15th, customer A purchased a total of 100 toys for $5 each on account. Sales tax is 8.25%. Record this transaction.
So we put sales
How did they pay us?
on account. So
On an account.
Yep. Accounts receivable.
Accounts receivable. Okay.
And sales.
Mm-hmm.
Sales tax.
Sales and sales tax. Good. All right. So accounts receivable. So how much is your total sales?
500.
500 because you sold 100 toys at $5 each. So it is wrong one. 500. All right. How much tax are you going to be subject to collect?
41.25.
$41.25. So therefore, what is the total amount that this person owes you?
540.
$541.25. Okay. And again, I'm going to make a note here because I sold 100 toys to customer A. Now, of course, I'm not going to teach you the perpetual way of doing this, just because in this context, I'm not teaching you how to deal with inventory. I'm just teaching you how to record the receivable and what happens to the receivable. Okay. So good. Number 6, on July 15th, we received a payment check of $50 from customer A. All right, so how do you record this transaction?
Maybe.
Debit checking,
Good, because they gave us a check, right?
Mm-hmm.
And what else?
credit accounts receivable.
Yes. And in this case, it's for $50. So therefore here, I'm going to make a note here that customer A paid. Okay? Or a payment from customer A, whatever makes sense for you. Number 7, on August 15, customer A refuses to pay for the remaining amount. For the remaining amount she owes, okay? So how do you record this transaction?
We have to put allowances for that.
Absolutely. Good. So allowance for doubtful accounts. And what is my credit going to be?
Accounts receivable.
Yes, we're transferring the amount that she owes us, right? So, and we're putting in a placeholder, right? So, what is the amount that
450.
450 even?
If I remember number, because I just follow you how, yeah.
Four
No,
fifty.
it's not 450.
451.25, but she made a payment.
Yep. So 541.
So we got 491.25.
Say that again. 490.
1.
25.
25.
Good. 491.25. 25. Okay, number 8. We contacted customer A to retrieve the debt that she owes us. Okay, but then on October 20th, okay, we received another payment of $15 on from customer A. So we recognize that in August she refused to pay. Okay? Now fast forward a couple months later, right? We decided to contact them and now it's October 20th. And then she finally budged and said, "Okay." So October 20th. So what do we have to do first?
Accounts receivable.
Why accounts receivable?
Because we have to put it back because we have her on an allowance and doubtful accounts. So we
Good.
have to put it back in the account.
Good. So here, accounts receivable. Good. And then what's my contra account going to be? I'm sorry, my
Allowance
credit account. Good.
for doubtful accounts.
Hmm.
And then checking.
And then checking because we received a payment. Yes.
And then accounts receivable.
All right. So what are my amounts for?
So it will be 491.25.
Okay.
And then the checking would be $15 because she paid 15. And your accounts receivable will also be 15.
Good. All right. And then I'm going to go ahead and make a note here that customer A made a payment. So again, I'm going to, so payment from customer A. Okay. So then what has happened next? Okay. November 28th. Okay. A debt collector informs you that customer A has filed for bankruptcy. All right. And can no longer make payments. So how are we going to record this?
So would that be a bad debt expense?
Are we at the end of the are we at the end of the year or at the end of the given period?
Not yet. We move it back into the allowances.
Yes, we need to move it back to the allowance because we're in the middle of the period, right? It's November 28th.
Right.
Okay. And we know who is faulting on their payment, right? We know it's this person and we know the amount. Okay. So let me see, what's this November 28th? So yes, we are going to be moving it back into the allowance for doubtful accounts.
Maybe accounts receivable.
Mm-hmm. For how much?
It's 341.25.
341.25. 341? It's not 50. It's
No.
15,
Yeah,
not
I know.
50.
476.25.
476.25.
Yes.
Okay. And again, all right. I wouldn't know what else to say, but I'm gonna say this is customers customer A's debt. Okay. All right. And then lastly, question number 10 here. On December 31st, our company estimates that $2,556 of a $200,000 accounts receivable is uncollectible. Okay. And there's currently a debit balance of the $476.25 in the allowance for doubtful accounts. Now we can go ahead and record this.
Bad debt expense.
Bad debt expense, good.
Allowance for doubtful accounts.
Bad debt expense and allow for doubtful accounts. For how much?
2079.75.
2079?
0.75.
No.
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 It's gonna be add.
Yes.
Add.
3,032.25.
3,032.
3032.
3032.
0.25.
0.25. Okay. So yes,
Yeah.
we know that we're
3476.25. Yeah, that's correct.
okay. Perfect. All right. So here we're using what method? We're using the balance sheet method, right?
Yeah.
So three things that we need to recognize, right? First thing's the estimate. We know what the estimate is. It's $2,550, $56. And then second thing that we need to look for is the word accounts receivable because that tells us what's the next thing to do. So in this case, we do recognize accounts receivable and we see that there is currently a debit balance. By following the rules, if we see a debit balance, we know that we have to add it. Yes. Okay. Reason being is because at the end of the day, your your allowance for doubtful accounts is a contra account. It needs to hold a credit balance. Okay, so in this case, the reason why it looks like this is because you need there's 3 steps into this process versus only 2. Okay. All right. So number 11, on December 31st, okay, your company estimates that $2,430 of a $500,000 total credit sales is uncollectible. Okay, and there's currently a debit balance of $1,500 in the allowance for doubtful accounts. The adjustment entry should be,
Bad debt expense.
it's going to be bad debt expense, yes.
Then allowance for doubtful account.
Uh-huh. And for what amount?
$930.
No,
No.
excuse me. No, that's not right.
$3,930.
No.
Yep.
No.
Let's look at this carefully, okay? Which method am I going to be using? The balance sheet method or the income statement? Okay, so the income statement. We only need to recognize 2 things for the income statement. You only need to know the estimate and the word total credit sales. So in this case, I don't care about what debit or credit balance I have in my allowance for doubtful accounts because it doesn't appear on my income statement.
2,430.
So it is $2,430. Yep. Okay. So make sure you guys know that. Okay. Okay. Here on December 31st, okay, your company estimates that $2,430 of a $500,000 accounts receivable are uncollectible. All right, and there's currently a debit balance of $1,500 in the allowance for doubtful accounts. The adjustment entry should be,
$39.30.
$39.30.
Yes.
Yes, because it's a debit balance, right? So therefore, because it's a debit balance and we need to get to a total of 2,430 on the credit side, we have to add those 2 numbers together.
Add
Okay.
2,400.
All right, number 13, on December 31st, your company estimates that $2,430 of a $500,000 accounts receivable is uncollectible. There is currently a credit balance of $1,500. So how do we journalize this?
That'll be a bad debt expense. Allowance for doubtful account for
Mhm.
930.
930. 930.
Because we have to subtract the estimate from the credit.
Good, good. Because we're already on the credit side. How much more do we need to get to the 2,430? Right? We're already in the credit side.
Right.
Okay. All right, for this section right here, last question here on December 31st, your company estimates that 2,430 of its 500,000 total credit sales is uncollectible. there is currently a credit balance for $1,500. So what is the adjustment here?
Bad debt expense.
Bad debt expense.
Allowance for doubtful accounts.
Mm-hmm. All right. And for what total amount?
$2,430.
2,430. Yes, because we're doing the income statement. The allowance for doubtful accounts, again, does not appear on the income statement. All right. Good. All right, let's do some simple interest here. So get your calculators ready. So here I want to know what is going to be my interest for each of the following as well as the future value. So let's go ahead and get this started. So, all right, if my principal is $28,000, right, and my rate is 0.435, and I have 150 days. All right, so how are we going to find out what the simple interest on this is?
I have the 304.5 interest.
I'm sorry, what was that again?
304.5.
304.50?
Yes.
Okay, let's double confirm that. So, how did you calculate the time?
So it is 3 months or 1 quarter, right?
No, this is 150 days.
Oh, five. I'm sorry.
That's fine.
5 months.
Okay.
It's 0.75.
5 months would be what, 0.41666 repeating?
So, in this case, you could also do it as 5 over 12.
Mm-hmm.
Okay.
Yeah.
Okay. So, what is my total interest for this one?
There was 7.5.
Yes, 507.5. And then lastly, what's the future value on this?
28,507.
Good. All right. Let's work on the next one here. We got 5,000. I'm sorry. We got $5,147.50 as my principal, and my rate is 0.6%, and my time here is 10 years.
$3,088.50.
Mm-hmm.
All right, 3,000. What was that, Dan?
$88.50.
$3,088.50. So then that makes my new future value to be
3,836.
what was that?
82.36.
82.36.
And no cents.
Oh, okay, even. Perfect. All right. And then now let's solve for the last one. So if your principal is, sorry about that, guys. if your principal is going to be for this $684,150, okay, and your interest rate is 0.0349%, and you have 8 months to collect it.
$1585.60.
5085.62.
No, 1,585.62.
There you go, like that, right? Okay, so then what's my future
One
value?
1,585.
5,000. Okay, 562.
Sorry, I try my best.
No worries. Sorry. All right. So then, what is going to be my future value?
$685, 735.62.
685,735.62. All right. Good. Okay. Last but not least, let's go ahead and finish this little sample here. So this is going to be more reflecting of what the exam was going to look like. I'm not going to clutter you with a bunch of copied, checks. I'm just going to make it simple as easy. You're going to be given 3 things, right? You're going to be given the bank statement. You're going to be given the check register or whatever it is, check or cash register, and you're also going to be given the worksheet itself. Okay, so the bank side and the cash side. So, which side do you want to start on first? You want to start on the bank side or you want to start on the cash side?
Cash.
Cash. Okay, so first things we got to do is we got to find out what the ending balance in our cash ledger is. So here's your cash register. So what's my ending balance?
400.
Yep, that 1410, yes.
450. 1410.
Wait, 450? Where did you get 450 at?
Just make look at this.
Okay,
14.
1410. Yes, 1410. It says right here, your cash ledger ending balance as of May 31st is going to be 1410. Okay, so then what do I have to add to my cash side?
Interest.
Interest. So let's go look at my bank statement. So I have interest for $25 and CH for 175. Okay, so here my cash ledger, I have interest for 25 and I have ACH for 175. Okay. What do I need to subtract from my cash side?
Fees.
You need to subtract your fee. So here I have a service fee for $100. I have an NSF fee for $50, and I have a return check fee for $35. Okay, so 150 and 35. So here we are. We got service charge. We have NSF. And we have return check fee. All right. And that was the amount for service was 100. NSF was for 50. And the return check fee was for 35. So what is my new adjusted balance in my cash ledger?
1425.
1425. All right. So let's go ahead and take a look at the ending balance in my in my bank statement. So what's my bank statement ending balance?
850.
850. Perfect. 850. Okay. What are we adding?
Deposit in country.
Deposits.
Okay, deposits. So let's take a look at my deposits. I have deposit 44, 45, 46, and 47. Let's see, what did the bank clear?
44 and 45.
So we have two of them that are missing. So 46 is for 300, and for 47 it is $450. So depreciation number 46. Depreciation, deposit, excuse me, deposit for 47. All right, and that was for 300 and 450. All right. And then what is our last thing that we have to do we're subtracting from our bank?
Outstanding checks.
Outstanding checks. So here we wrote check number 101, 102, 103, 104, 105. Which one actually cleared?
1, 2, and 3.
Good. So that means I'm missing 104 and 105. 104 for 50 and 105 for 125. So check number 104 and check number 105 for 50 and 125. So what is my new adjusted balance in my bank?
1425.
1425. So that's, like I said, this is exactly what I'm going to do for you, all right, on the exam. I only want you to know deposits and outstanding checks, interest / ACH, and your fees, whatever fees that are entailed. All right, and this is exactly how it's going to look. I'm going to give you like a very, very broken down basic table that has your bank statement and your either checking or cash ledger. And I'm going to also provide this table for you as well. So therefore, it's pretty straightforward that you have to follow the do's for the bank and the ifs for the cash ledger. And then the one thing that you need to make sure is that the new adjusted ending balance must match on both the bank and the checking. Okay, so good job. That was chapter 9 and 10 for you. Any questions in regards to what we learned up to this entire week?
So we have quiz tomorrow.
Yes, we have it starts today.